Welcome to Commodity Analysis on October the 1st, 2013, and we're going to take a step back in terms of time frame and have a look at some of the North American US equities, equity indices. Let's have a look at the E-mini S&P, and then I'm going to move on to the E-mini Dow and also a quick look at Euro Stoxx 50. This is the big picture. This is the daily, and everyone's trying to make sense of it using advanced linear techniques, and this is not an advanced chart. This is a very simple chart. For those of you who aren't familiar with the techniques used on this site, we use a mixture of Andrews pitchforks, proprietary pitchforks, but most important of all, reaction lines. A reaction line is simply using a fork such as this, the distance from here to the midpoint of AB, in other words this line here, projected forward into the fork, and it's not drawn in any of these cases except for this blue fork here. First of all, let's look at this green fork I just mentioned. This green fork has supported price here. Let's fatten this up a bit for you. Here we go. That was the touch on the QE news that came out right at the beginning of the year, end of December, January the 1st, I think it was, and we saw a gap up, this big bar, bullish bar, and then a big gap up, a higher high, and off we went. We were off. And then later on, after we'd had a touch in spring, several touches, and a lot of behavior, price action around these lines. And remember, price action with the reaction lines tends to be what's called a cut-through trend. They behave as cut-through trend lines. And of course, that depends on price distribution around and what time frame you're looking at. So it'll look quite messy. If you look at this, for example, the second touch, early summer in June, the second touch on this lower median line parallel, this lower green tine of this pitchfork, there you can see 2 wicks sticking through. You get down to the 60-minute. That's a bit of a bird's nest, you know. But here, we can separate that out. Let's have a look at those 2 bars, and you can see that's nice and clean. The actual shadow is above the line. And that's price distribution, terribly important. And again here, you can see on this center line here, very rarely do we get this sort of behavior where price pings off like a ping pong ball. Here's the most recent touch in our series of free, what has turned out to be now, free waves up, free tops, you can call them so far, in an ascending pattern. A high each time, a higher high, and a higher low. There's the first low, there's the second high, there's the second low, higher low, and here's today. Look at that, bang on this green median line parallel, and a nice bullish bar. And here is the first of the reaction lines that I've drawn in this blue fork, and let me just show you, take you slightly out. This is important because it's the I guess the 3 most important pivots, with the exception of the most recent high, and it does work a treat. The most important thing about this, and this was drawn way back before midsummer, was that price never touched this line, the center line, although it was heading for it. And this has been the pattern with the US North American indices. The price never reaches the center line, and that shows us the buyers are in control, however crazy it may seem at times. And you're pulling your hair out thinking that the end is nigh, and then you get a reversal and a strong uptrend like we saw here from early mid-June up. We touched the upper median line, light blue here, this line here. Twice we've done that. Twice we've done that, and twice we've made first a higher low, and today it's too early to say definitively if we've made a higher low today. But I also want to draw your attention to this fork here that we drew back in the summer, and again, same as the blue fork. It's a perfectly valid downsloping Andrews fork. Price, we saw nice action along this line, this upper median. Let's fatten this up for you and make it slightly bigger, because we're being a bit mean with the size here. There you go. And if you go down to the 240 minute, and I'm not going to because I want to move on quite quickly, you can see there was great resistance along this upper median line parallel, and we had this bar here, then this and this one, and we were all beginning to think, right, it's all over bar counting the bodies. and then we found support again on this lower median line, green line, this lower median line parallel, and this came into play, the reaction line from this blue fork. And the combination of the two, and it's never just one fork, there's never just one reaction line. This is just revealing a tiny fraction of what I believe to be the matrix that price moves through. This is organic support and resistance, because all any one of these forks does is express frequency. It expresses, for example, the frequency between these three pivots here. And again, you can see a failure to reach this. That's a perfectly normal Andrews fork. There it is. Let's get rid of this one. Let's get rid of this one, excuse me. Otherwise we'll confuse you. We can bring that back in a minute. Perfectly reasonable fork to draw. And again, we've held on this green line and up we go. And there's also this fork here. Now this is where I differ from many other and extremely good educators with pitchforks. They wouldn't draw this fork. They wouldn't express the frequency in this fork. And here's its reaction line. And if I extend that reaction line beyond the body of this fork, and I've drawn this manually, this is E-signal. These all have to be drawn manually. We did try and get an indicator, custom indicator to be coded for us, but and we'll find if we were to tighten this up and do it carefully, you can see how difficult it is to draw forks in E-signal in a high time frame and then drop down. We're slightly off on that pivot and slightly off on that pivot. So, you know, it takes time to produce a study in E-signal, but they're incredibly accurate once they've done. But again, I would bet my bottom dollar that that reaction line, if I do it in Metatrader, and we're going to go on to that in a minute, will show a touch on this reaction line. So it's a bit like putting your foot through the ceiling when you're in the loft. This is the price action. Let's go into the 60-minute, not the 10-minute. You've put your foot through the ceiling, but you've managed to pull yourself up. You're not coming through into the bedroom. And there you are. Price then stabilizes. And this is the price distribution. You can see this previous reaction line acts both supporting and this afternoon a touch of resistance. But price, this is the line we're watching, this green line here. Let's go to the E-mini now quickly because time's running out. Here we go. I want to show you this. This is beautiful. Two forks. This fork here. This is the daily chart, of course. Again, perfect. Up we went. Touched the center line. Straight through that. We didn't expect that. Straight through. And we'd drawn this fork once we saw these bars. No touch on the center line. Up again. Same thing's happening today. Let's just get rid of this. Look at this fork. Let's give it a bit of space. In fact, let's go down to the 240 minute for that. You can see the distortions that's produced by the line tool in E-signal. And again, look at this. This is the center line here, the downsloping black fork we're talking about. Price moves up today, this big bar, and I guess we'll have a resolution sooner or later from the US concerning the budget, and price will fill this gap, which I'm not entirely sure has even been filled today in the E-mini Dow. I guess that's as good as filled. And have to have a look at that in a lower time frame. But we also, if we go out back to the daily and get rid of that, what we've got is not only this lower warning line, or reaction line we'd call it, supporting price here, but if we go to the daily again, insert that fork we've just drawn, we have a retouch on the upper median line parallel. That the fork that I just drew showed you, there it is, this one here, where we never reached in the summer, we never reached the center line. Buyers were firmly in control. Let's get rid of this little one now, and you can see, we go down to the 240 minute, as accurate as this can be. Look at that price distribution. Often you see a zoom through here, gapping up, touching the center line or the lower line, and there. Having said that, we look at the E-mini Dow. That to me doesn't look the most convincing series of higher highs and higher lows, but it is. and we have to admit that first of all we made a new high, then we made a higher low, and then we went on and made marginally higher high, higher low, marginally higher high, and here we are again, and we're making an ascending pattern. Whether that over the long term remains valid and where we'll go from there. What was interesting was on Friday, we've been in the class, with the students, what we've got is this fork here. In fact, let's turn that into blue and show you that quickly. Before we go into Metatrader, I just want to isolate this and show you guys this, because this is great. We don't take I don't take positions on close of Friday business, but that looks extremely exciting there for a moment. You could have been, I guess, greedy enough to think that was going to be a new low pivot, but of course we've gapped through. Now we've retouched here, and this bar is very interesting, and we'll be seeing what happens over the next coming weeks. So let's go over to Metatrader, and all together, let's have a look at the daily chart, and you can see this is the fork I've just been showing you about. That fork, let's scroll forward, this has got all the reaction lines in it, as you can see. There's those same two bars on Friday evening. They gap through, and now, in fact, what I've done, I'll show you this. This is quite interesting. This is a manually inserted line over, here it is, you can see it here. It's actually from fork F, which means it's not an Andrews fork, it's one of our proprietary forks. And we've drawn, because it's not visible, its pivots aren't in the database of the 60-minute, it doesn't appear. So we've drawn a manual line over it, and look at that. Let's go down to the 30-minute. You can see the effect that has on price, and here's the relation. Here's another fork here. This is why we use historical medium lines and also reaction lines. And reaction lines will show you the mood price is in. Here's another. I want to show you these. This is E-mini S&P. Here's the daily. This is using the gap from that. That was the green fork here in the E-signal chart. And in fact, let's make that green again. There it is. And we're using this bright pink fork, drawn off the gap, that gap up on late December. If we go to current price behavior, look at that touch today using that gap fork. And there was the first touch on the lower green median line parallel, and we had that lovely trade and that great rally. Then we failed. We just quite simply fell through the green, and we found various lines, and we looked at these lines that supported price, and we saw this dance of higher, again, same ascending pattern, and then eventually a breakout after everyone come back from the holidays early in September. And here the recent retracement. Again, look at price distribution. Look at this reaction line. That's a beauty. That's a beauty. Look at that. Let's just show you. That was last week's business. And that, in fact, let's fatten that up, because I just want to illustrate to you why it's so important to understand price distribution, cut-through trend lines. In other words, don't expect a perfect little, like this. Don't expect a long wick just touching the line and then falling through. What you tend to get, and especially the higher the time frame, you tend to get oscillation of price around, above and below any line, and that goes for median as well as Andrews, as well as reaction lines. And here's a perfect example. If you can't see the correlation with that, let's go down to the 60-minute and scroll forward, and there it is. And you can see the location. We've got a touch there, various penetrations, support and resistance. And by the way, this is the same reaction line, but in a different time frame. It's moved slightly. This is why we draw them manually. And you can see again, touch here, touch here. But today we seem to appear to have broken higher. Now we'd have to have a look and see how many other lines are in play. How many important lines? Because we only want to draw the most important lines. This is all about drawing the most important lines and then overlaying various indicators onto these templates. And here again, Here's our gap fork. You can see, look at this, beautiful. And look at the upsloping reaction line. Again, remember this upsloping reaction line, I can't, if I refresh the chart, that will go back like that. Okay, and you can see all of these reaction lines. Okay, if you start to understand price, as being distributed around, in and around these lines, look at this head and shoulder. That's how you see head and shoulders. Once you get a diagonal like this, a diagonal cut through line. Look at this, touch, touch. This line comes into play, fall away, small retracement, up, zoom through, touch, touch, zoom through. There's the head, right hand shoulder, the diagonal reaction line, again, fall away, continuation. This line here, you can see price fell. That's interesting. That's great. Look at that. Price, where is it? There it is. Let's have a look at it now. This line here, price fell through, support on this line here, support on this blue median line, through, failed, up. Look at this. It's been choppy. To be honest with you, this unless you're scalping, this is not a great market at the moment. It's not what I expected, but we're going to hopefully sort out the trend direction. We'll see either what becomes of this low pivot, which we've seen over the last day or two this week, whether we're done with it or whether we're actually going to fail. How we're going to work that out, the most easy thing to do is to start drawing in lower time frames Andrews forks, proprietary Andrews forks and non-proprietary Andrews forks. That's, I guess, the first relationship, the most important relationship in the 240 minute. Price is going to be attracted to that line. We'll be watching to see what happens with the E-mini S&P. I just want to quickly move on to the Euro Stoxx 50, which seems to defy gravity. If we go down to the daily, first of all, before I slip down there, you can see this is historical median lines, reaction lines in dotted and dashed red, all automatically drawn. The only thing I've ever done is gone over them like this. I go over them with a manual trend line just because of line location problems, and that subject is dealt with on the website. And look at that. See, there's the location now in the 240 minute. Here it is in the day, in the daily chart. All I've done, manually over that, manually over this. Drop down, look at the angles change, the locations change. We've got a touch on both. First of all, we've got a beautiful touch here on this first reaction line. Then the gap down, and then this supporting our manual trend line. This is the location in the daily. Look at that, supported, gap closed, and we're off. And the point about this is to just show you, this is a valid Andrews fork here. I'm wobbling around. Look, there's the high, this pivot here, this low here, this low here. Okay, no, not even a sniff at the center line, no inclination at all. We didn't even test this horizontal support here. That's, you know, one of the great trade entries. Horizontal support from horizontal median lines using a combo setup with reaction lines. You've got to learn about those. Those are our bread and butter. We stick the bolly bands on, and I'll show you how to trade those. But look, not even a sniff, not even a sniff at this center line. So price certainly looks as if it's going higher after giving us all a scare over the last few days, certainly last week. We'll be seeing how it does. We're going to look at gold tomorrow. You're free to subscribe to the daily video that's sent out. Please join us again. Bye now.